Hello, bankers. A very good evening to all of you. Welcome back. So, welcome to JIIB CAIIB Prep. I hope I'm clearly audible and visible to all of you. Tina ma'am, very good evening. Ajit sir, Sri Ram sir, Kanak sir, very good evening to everyone, guys. My audio and video is fine, guys. थोड़ा सा सेशन था इससे पहले. Yes. Now session is started, Tina ma'am. Everyone, guys, quickly join in so we can start our today's discussion. Okay. So today's discussion is around module B. All right. So module B, risk management. When it comes to the risk management, very important topic again. Okay. Module, sorry. So risk management, which generally cover these many units: risk and risk management framework, risk in banking business, risk regulation in banking industry, market risk, credit risk, operational risk, liquidity risk, and Basel III frameworks on liquidity risk, right? So everyone quickly join in. Everything is fine from my side, guys. Okay, sorry ma'am, sorry, Kanak ma'am, sorry. Yes, everything is fine from my side. Audio and video is fine. So we can start our today's discussion. ठीक है, JIB वाले लोग थोड़ा सा नाराज हो जाते हैं. Yes, हाँ, ठीक है. Yes, हाँ, very good evening to all of you guys. Himanshi ma'am, very good evening. So guys, in this particular session, we will target maximum unit from your module B itself. So shall we start then? If everything is fine, so we can start our today's discussion. So we will be starting with our very first module or very first unit, unit 11, risk and basic risk management framework. Okay, so this is all about what is risk. Take a risk are basically these are the future uncertainties. When these uncertainties become reality, so banks, they might face some sort of financial losses, and those financial losses are generally categorized as risk itself, right? So risk आपका ठीक है. Then we have these three things are generally known as risk trinity. ठीक है? We have risk, capital, and return. Then we have risk manage, like why the risk need to be managed, and risk management framework, right? So these are the areas which are generally part of this particular. A very good evening to all of you guys, those who are watching live as well as in recorded, right? So when it comes to the first thing, like everybody knows about the risk thing, what is risk, and basically these are the financial uncertainties. It can be related to, we have different type of risk, like market risk, adverse movement in the prices, where we have some sort of portfolios, credit risk or obligor risk, where these are generally linked with the borrowers things. Okay? So when they default, so that is your credit risk, operational risk or liquidity risk, and other areas also, right? So now when it comes to the risk written and risk capital and written trio, so it is also known as risk written and capital trinity. So basically it is, they have a linkage. So let's say if we invest in high risk securities, the return is high and the capital charge against those particular one is also higher side. And when the risk is low, so your return is also low, and the capital charge, or the basically while we do the risk mitigation things, so that is also at a lower side, right? So higher the risk, higher the return, higher the risk, higher the capital, and vice versa. Bank maintain capital funds as a percentage of risk weight assets. Bank creating low risk assets can maintain low capitals. Bank exposing to high risk assets have to maintain the high capital. Very basic one. Now, a risk management. When it comes to the risk management, this is all about the 5 stage journey. First one is basically we have, these are the processes. Organization for risk management, this is completely different one, where we have the entire framework, which include आपका board of directors, board of directors. Then we have risk management committee, we have ELCO. Then we have under risk management committee, we have your credit risk management committee, liquidity risk management committee, that is sometime ALCO also. Okay. We have market risk management committee and operational risk management committee. Under these particular committees, we have some task groups and subcommittees also. Okay. That is basically organization for risk management, and this is the kind of a framework. When it comes to the management part, we have these many stages. First one is risk identification. What type of risk our bank might face in the near future. तो किस टाइप के रिस्क हमें देखने के लिए मिल सकते हैं आपका, ठीक है. And the first, identifying the problem basically or problematic areas. Then second one is risk measurement. Risk measurement is something quantifying the losses. Ki if that situation occur, how much value we are going to lose in the near future due to those uncertain activities. Third one is risk pricing. So risk pricing is something where we try to mitigate our risk, and for that mitigation that involves some sort of cost, right? Let's say we have to maintain CRR and SLR, especially that CRR component. So we have borrowed money and we have some sort of liability on that particular one. But we have to deposit a certain portion with RBI, and RBI does not pay any interest on that particular amount. So we are losing. Let's say we borrow, on an average, we borrowed that particular money at 5%. So we are directly losing that 5%, right? And even sometime, let's say we have some market portfolios and there is some adverse movements in the market. So we go for some sort of hedging, and that hedging costs us. So that is like, if we are managing that particular risk, how much it will cost to us. That is your आपका risk pricing, right? Then we have risk monitoring and control. Risk monitoring and control, whatever policies we have, board approval policies or bank-wise policies and all, they generally comes under this. And the final one is mitigation, where we actually, this is the situation when that uncertainty become reality, and now we have to implement our plans in the market itself. So that generally comes under this particular one. So now this process will get repeated with each type of risk. Whenever we comes to the, let's say if it is market risk or aapka credit risk or others, so these two things, they'll repeat it in different cases. Like let's say if we are studying market risk, so board of directors, then we have credit risk, आपका risk management committee, it is risk management committee. Then under risk management committee, we have your market risk management committee, we have subgroups, we have task forces and all. So that is generally known as structure for or organization for the risk management itself. Okay? So organization for risk management means the responsibilities, okay, who will responsible for what basically. Okay? So it include, eventually the responsibility belongs to the board of directors. They are responsible for any type of losses made by the bank itself. Okay? Ultimate responsibility belongs to board of directors first. Risk management committee. So under board of director, it is also a board level committee which is dedicatedly manage the overall risk in the bank. Okay? So वो आपका market risk हो या others. तो basically जो आपका overall risk weight है आपका, उसको divide करना, and what will be the policies and others, so come up with those particular plans and all, that is generally decided by this particular one. Okay? Under risk management committee, we have subcommittees like market risk committee, market risk management committee, operational risk management committee, liquidity risk management committees and others. Okay? The committee of senior level executive, which is also known as subgroups, which include ALCO, Asset Liability Management Committee. We have Asset Liability Committee. We have Credit Risk Management. We have Operational Risk Management. Risk Management support groups we have. So this is the entire things. The Board of Directors has overall responsibility to for the management of risk. The board articulates risk management policies, procedures, aggregate risk limit, overview mechanism, reporting and auditing system. The board should decide the risk management policy of bank and set limit for the various risks. Ultimately, the entire responsibility comes to the board of directors itself. Okay? So now this is something which will get repeated with each and every type of risk. Once you'll come to the market risk or liquidity risk or credit risk and all. So for everyone, we have the areas, take a same structure and their responsibility. Like the responsibility of board of directors will remain similar in every cases. Now we have like risk management committee responsibility toward the management of credit risk. तो वहां पे उनकी responsibility credit के around होगी. In market risk आपका market around. In case of operational risk आपका it will be operations around, right? So this is clear, I guess. This is clear to everyone. So now risk management committee, the board level sub committee, which is responsible for the risk management committee with regard to risk management aspect, including setting guidelines for the risk management and reporting, ensure risk management processes conform to the policy, setting up prudential limits and their periodical reviews, ensure robustness of risk measurement models, and ensure proper manning for the processes. Sometimes they might ask you for half marks or 1 marks. These areas, the responsibilities of risk management committee. Under this, we have different committees as well, right? So now the next one, which is these things will get repeated. So with like while you study this particular module in detail, with every type of risk or every form of risk, you will see these areas, right? ELCO आपका asset liability committee, again responsible for the managing overall assets and liability, or that means the balance sheet things. So oversee the liquidity risk of the bank. Liquidity risk means any sort of like when banks they won't able to meet their short-term debt obligations and all, and that can lead to so many other risks also, like reputation risk and all. Monitor and ties to protect or improve the net interest margin of the bank, NIM, which is linked with the overall earnings of the bank. How we calculate NIM, who will tell? जो लोग थोड़ा सा बोर हो रहे हैं वो आपका जल्दी से बता दीजिए. How we calculate NIM, guys? What is the formula to calculate NIM? Then we have BPLR or base rate, MCLR or these one. Mid office group आपका monitoring of treasury operations and all. Then credit risk management committee, ensuring robustness of credit risk. Same आपका yearly rating wise distribution chart, rating wise migration charts, yearly probability of defaults and all. They generally get basically calculated by this one or managed by this one. Operational risk management committee, which ensure operational risk related areas, analysis of frauds in the bank, basically internal or external both, clear any new product or processes put up by the business unit if we are coming with some new product. So what is the risk involved in that particular one? And if we have already tested product or the old product, what is the inherent risk involved in those particular one? Apart from these major risk management committees, we have some support groups and some departments also. They generally assist in different areas as well. Okay? NII divided by average asset, 100% too. Who mentioned this? Yes. Interest paid minus interest earned. Nahi, Ajit sir, that is your NIM. That is your NII. So whatever you have mentioned, that is called NII, net interest income. Okay? आपका inflow minus outflow of interest. NIM is NII divided by average asset, as mentioned by Himanshi ma'am, and Pujisha ma'am is interest. Pujisha ma'am and Ajit sir, that is your NII, net interest income आपका. That is different, and NIM is आपका where we generally link with the average asset. So risk management, this is the entire area which we have discussed, and this will be part of your entire journey. Now the most important things, the previous things which will get repeated with the other topic also, but this is something which get asked so many times in your examination as well, right? So ERM, or it is also known as आपका EWRM, enterprise wide risk management framework. Okay? So EWRM or ERM framework, this is very important, guys. So you can expect one question around this particular one. So many times the question that generally get asked based on this one. So EWRM or ERM, it is basically a bank-wide model which generally help us to identify the different type of risk. It's a continuous model basically as you'll enter into the as you'll create the assets and liabilities. So what are the overall risk involved in different activities? So with this we have four core objectives, and we to achieve those four core objectives we use 8 components. EWRM, which has these are four major areas: strategic efficiency, operations, reporting, and compliances. These are the objectives which we generally try to achieve through the your EWRM model itself. Okay? And to achieve these four objectives, we have eight different components. These are internal environments, objective settings, event identification, risk assessment, risk response, control activities, information and communication, and monitoring. So it is apart from your regulatory compliances. We do have regulatory norms. We have to have follow those particular one. So apart from that, bank also they have this particular framework. Okay? COSO, who generally provide this particular one. Okay? And this is the continuous model, so which help bank to achieve these efficiencies in these four areas itself, right? So it generally help us आपका review of the internal environment with a view to assess the risk philosophy and the risk culture, review the process of setting objectives, assessment of existing mechanism to identify risk factors that affect achievements of the desired objective, evaluation of existing process of assessing risk, assessment of process for responding to identified risk. Okay, apart from this, evaluation of adequacy of existing control process. Okay, and then we have assessment of adequacy of existing management information system, MIS, review of process of monitoring risk and all. Okay, so these are the core steps or objectives which we generally try to achieve by using EWRM model itself, right? So EWRM involve the following steps आपका, ठीक है. So bank have which we have discussed. It is by committee of sponsoring organization of that tradeway commissions. It is known as COSO. Okay? They generally come up with this one. COSO EWRM framework has all components that could help the bank to stand a chance to derive business value while meeting compliance requirements. 8 key components which are internal environment, objective settings, risk management, risk response, control activities, information and communication, monitoring. These are the 8, and these are the core 4 objectives which we generally try to achieve through this particular one. So many times you will see question around what is the objectives of the EWRM model, and how it is different from the regulatory requirements or others. It is a continuous method basically. So which generally help bank internally manage the overall risk in the bank itself by using these different areas and all, or overall assessment of our risk management tools and all. By using these 8 components, sometime you'll see question which of the following is not a component of your EWRM model, or which of the following is not an objective of your EWRM model. So they get asked so many times, so you have to be very careful around this particular one, right? So this was the introduction. First 2 units are kind of introduction to your remaining areas and all. So 11 now. Unit 12 आपका risk in banking business. When it comes to the risk in banking business, we have few areas like the different books आपका, ठीक है. So BCBS, Basel Committee on Banking Supervision, they have done some classifications, ठीक है. We have 8 core business line, ठीक है, activity wise, bank activity wise, or the dealing wise. So basically on day-to-day basis we deal with so many activities and all. So all these activities are further categorized among the 8 core areas. Okay? So these are generally known as 8 core business line. Now risk wise, these 8 core business line are further categorized among 3 areas: business book आपका, then banking book, then we have trading book, and off balance sheet exposure. So this particular topic, if you comes to the unit number 12, so ये areas आपका जो सबसे ज्यादा important रहेंगे. कौन सा? Risk identification in banking business. So where we have 8 business line, and banking book, trading book, off balance sheet exposures. These are the important one. If you come to the 12.5, it is something which will get repeated with the remaining topics and all. Banking risk definitions. तो जहां पे उन्होंने risk क्या होता है banking के अंदर, and what are the different type of risk involved in banking business, they have mentioned here. But if you ignore this particular one here, you are going to automatically cover in the coming session itself, right? तो यहाँ तक clear है सबको. चलो, now we will start again. So if it comes to the risk definition. So as per BCBS, we have 8 business line. ठीक है? So overall banking activities. So banking business line are many and varied. Commercial banking, corporate banking, retail banking, trading, investment, and various financial services from main business line of the banks. Within each line of business, there are some subgroups. Each subgroup contain a variety of financial activities. ठीक है? Bank line may vary from retail customer this to this. ठीक है? There is nothing in this particular one. ठीक है? Now, as per the BCBS classification, this is very important one. ठीक है? तो as per the BCBS classification, we have 8 core business line. These are this is a business line, corporate finance. ठीक है? We have trading and sales, retail banking, commercial banking. So if it comes to the corporate finance, it includes subgroups like corporate finance, municipal and government finance, merchant banking, advisory services and all, merger and acquisition, underlying and all these they generally comes under this. Very easy one, understandable, but एक बार आपको इनको go through करना बहुत जरूरी है. ठीक है? So these are the 4 business line: commercial banking, then retail banking, आपका trading and all. Apart from this, we have payment and settlement, agency services, asset management and retail brokerage. So these are the मतलब जितने भी हमारी जो एक्टिविटीज होती हैं बैंक्स की, वॉट एवर एक्टिविटीज वी डू ऑन डेली बेसिस, these activities are further categorized among the 8 core business line. ठीक है? As per BCBS classification. ठीक है? So this is the business line subgroups आपका activities. Now when you study this particular one risk wise, ठीक है? So in risk management, when we categorize these 8 business line among the different books आपका, so they are further categorized among 3 areas. These 3 areas are आपका, first one is banking book. So banking book which will generally deal with the deposit and advances, means your liabilities and asset core आपका. So deposits which are the liability product and advances, these are the asset product. ठीक है? So they comes under this one. Trading book आपका trading portfolio or trading book which include where bank enter into a trading portfolios. It can be on behalf of customers or clients, or it can be the proprietary position of bank itself. हमारी खुद के जो investments हैं वो, या फिर किसी customer के behalf पे जो रहेंगे. And off balance sheet exposure, this is the third book आपका, where we have like guarantee work like LC or any other sort of contingent liabilities and all, they generally comes under this particular one. Correct है? So now you have to make your understanding around these 3. This is a bit important. कई बार वो आपको पूछ सकता है what comes under trade आपका the functions आपका, like when it comes to the your आपका banking book ना, so these are like they are not subject to M2M. ठीक है? These are subject, trading books are some trading securities are, or the assets or liabilities under this one, they are subject matter of M2M, mark to market. But these are not subject to M2M. They are held for a fixed maturity. So these kind of features, they are very important for the examination purpose as well, right? So now, okay, chalo. So banking book, acha, let's have a quick look. Just there are some queries. Chalo. Queries are very long, so I'll answer after class only. Okay? So now when it comes to the, okay, just a minute. Okay, so now when it comes to the banking book, which include advances, deposit and borrowings, so they are normally held until maturity. These are the features. You have to remember these particular areas. ठीक है? तो ये area सबसे important है आपके लिए. These are held until maturity. Accrual system of accounting is applied. Accrual system of accounting means, like, let's say we have created some assets. ठीक है? So we have EMIs and we consider for the entire tenure of that particular, let's say that loan is given for 1 year or 5 years. So we do accounting accordingly. This year will get these much of EMIs and all. Okay? When that asset become non-performing, after that we do accounting on cash basis. Once we'll receive the money, then only we'll account. Otherwise, in case of accrual basis, what we are generally doing, let's say we have created one asset, so these are the 12 months, and on this date we'll get the money. So we like previously we generally account that particular one. मतलब पूरा साल होने से पहले हम लोग उसको उस तरीके से accounts करके आपका चल रहे होते हैं. They are not subject to M2M basically. Trading book securities are subject to M2M. They attract capital charge on credit risk, not on market risk. Capital charge means आपका the buffer which we have to create to mitigate a risk in that particular book itself. Okay? So basically we are giving loan, so that is a credit, so they'll be attract these kind of capital charge. Trading book आपका mostly fixed income securities, equities, foreign holdings, commodities, they are generally comes under this one. So these are the major features. They are normally not held until maturity. Position are liquidated in the market after holding the asset for a certain period once we reach to our targets. M2M system is followed, and differences between the market price and book value is taken as a profit or losses. Okay? So one question around all the three books with multiple statements you can expect around this particular one. Okay? Balance sheet exposures where bank issue guarantee or committed or backup credit lines, letter of credit, etc. They generally comes under this. These are contingencies adversely affect the revenue generation of bank. Bank may also have contingent asset, and derivatives are also comes under this particular category as well, right? Any question around the these particular areas, guys? Any question around this particular one? Any question around this one? So these are very important one. Please take them seriously. इनको बहुत अच्छे से ध्यान रखिएगा, ठीक है? Because you guys are going to face one question around this particular one, ठीक है? तो ये बहुत ज़्यादा important है, सभी लोग इसका ध्यान रखें. Now when it comes to the risk आपका, ठीक है? Risk in banking. So we have a liquidity risk when when we won't be able to convert our or meet our short term obligations, ठीक है? तो जो भी हमारी लाइबिलिटीज हैं आपका, अगर उनको हम पे ऑफ नहीं कर पा रहे, सो दैट इज जनरली लिक्विडिटी रिस्क. और व्हेन वी वोंट बी एबल टू convert our securities into cash. Let's say we have some market portfolios, so it can be part of your market portfolio as market risk or a trading book, or it can be in your आपका banking book also, right? So let's say we have given loan to a customer and that customer or that asset become non-performing. That means that asset become illiquid, and it can be in market also. So where we won't be able to convert that or liquidate that particular portfolio. It can be partial or it can be full as well. Interest rate risk आपका, interest rate risk where if there is a gap or there is a adverse impact on NII, so that is interest rate risk. Your NII, basically your interest payables are greater than your interest receivables. Market risk आपका adverse movement in market conditions. Default or credit risk, obligor risk आपका. Operational risk, some glitches in operation, and due to those particular glitches we are going to make some losses. That is your operational risk. Basic है आपका, ठीक है. Accrual means आपका, हिमांशी मैम, accrual means basically see the accounting we generally do on accrual basis in our banking things. Let's say we have created an asset, we have given loan to a customer for let's say for 1 year. It's a personal loan. Okay? So we have some sort of accounting, like every month on 5th we will receive this money and we do accounting for the entire period, right? So that is your accrual basis. That amount is going to be received next month 5th aapka, but we have already accounted that one. And cash basis is like when things, like it is when asset become non-performing. So in case of when an asset become non-performing, so what we have to do, we have to apply the cash basis accounting. Basically, once you'll receive, then only you will account that particular one in your books. So that is generally known as cash basis. So it is something related to this one. Interest rate risk example aapka, when it comes to interest rate risk. So let's say there are so many examples. Let's say the primary function of bank is borrowing for the purpose of lending. Let's say we have borrowed money from the, let's say there is a customer they have deposited 5 crore rupees at the rate of 6% per annum in a FD. Okay, so they have deposited this particular one with our banks. Now we have created, let's say this asset is for 2 years. Okay. Now we have created this particular asset with this taken value or liability. We have created an asset that is, let's say we have given this loan 5 crore rupees to some XYZ company at the rate of 10% per annum, 10% per annum for suppose that 10 years or 5 years. Take assume it is for 5 years. So now we have some sort of maturity mismatch in this particular case. Your amount is payable after 2 years and you have created a long-term asset with that particular one. After some time, what happened? So initially, what is your NII? Your NII is आपका the difference between these two, आपका that is 4%. ठीक है? Initially, our NII is equal to 4% or 400 basis point. Now there is some changes in the market. ठीक है? So let's say what happened after 6 months or after 1 year. So for first year, our NII is 4%. After 1 year, there is increments in the interest rate. These interest rate increase goes up to 8%. ठीक है? सो जहां पे हमने ये जो बोरोविंग किया था एट द रेट ऑफ 6%, नाउ इन मार्केट इंटरेस्ट रेट गोज अप टू 8% आपका. सो नाउ व्हाट दिस डिपॉजिटर विल डू, दे विल आस्क अस टू शिफ्ट फ्रॉम दिस टू दिस आपका, ऑब्वियसली बिकॉज दे डू हैव दैट राइट. ठीक है, अदरवाइज व्हाट दे विल डू, दे विल डू आस्क फॉर द प्रीमेच्योर एंड ऑल. इफ यू विल नॉट डू, सम अदर बैंक विल डू, राइट. सो दिस इज द केस आपका. सो नाउ if we shift this particular position from 5 to 8%, now we have this kind of problems. Okay? So this, let's assume कि it's a fixed rate loan आपका in case of personal loan or others. So what will happen? Your NII will get affected by 2%. Now for the remaining 1 year, your NII will be only आपका 2%. Earlier it was 4%. So there is a negative impact on our NII due to this interest rate changes. So when there is a adverse movement in interest rate, so that can affect our bank in these many ways and all. Who asked this question? Ajit sir, clear? Ajit sir and Himanshi ma'am, you got your answer for your query. So these are the different risks आपका. We are going to study all these risks individually because see, liquidity risk we have आपका separate unit, market risk we have separate unit. Under market risk itself, this interest rate, credit risk itself, it will interest rate risk will get covered. Okay. Operation risk we have a separate unit as well, right? So this is the one. Sometimes model risk is also there. Okay. Model risk is something, it is which can it can be related to the strategic risk. Strategic risk, let's say we have come up with one new product, we did some sort of research and all, and when we roll out that particular product in the market, there is a complete failure. There is no acceptance from the customers. So in that particular case, your entire you are going to make a huge loss due to that particular product. So model design to predict values of variables for its specially designed value of a given variables would depend upon the one or more. Okay, sorry. It is something related to, let's say we have plan our risk management things, and we have tested the different like whenever we plan the risk management, we test the different variables who generally affect the overall profitability of our portfolio. Let's say we take 4 variables, but that loss happened with some other variables, or the assumption which we have taken during designing that particular model that didn't work. So that is something around this. So which influence the value given in given variables. Let's say it's as simple. Let's say for market risk we are using a VAR system, okay, value at risk. So now while we do the let's say it is Monte Carlo VAR system aapka, or any other one also, okay. So while we apply those assumptions, we took some wrong assumption from the market, or even the past data we took from the past data, but the future scenario was totally different from the past itself. Okay. So sometimes we do have model, but that risk mitigation model, but there is a failure in that particular one. So that is around this one. So model risk usually arise because of the following reason: incorrect assumption or assumptions which have been non-relevant, ignoring one or more parameters, usually simplification or for some practical reasons, error of statistical techniques on insufficient data points, incorrect judgment in the dealing with the outliers and all. So they are generally part of this particular one. Okay? If loan become NPA, it come under credit risk or Rukmini ma'am, it is part of the credit. It is part of your. It will comes under the credit risk itself. Okay. So liquidity is something. मतलब like when majorly we use this particular one in market or we use it at a ALCO level. Okay, asset liability management level. Okay, it is something when you won't be able to meet your short term obligation. Let's say we have some payables on first, and how it basically work now. So let's say we have borrowed some money and we have created some assets. Your borrowing is for suppose that 2 years, and we have created one asset for 5 years. That means there is a ALM, the asset liability mismatch, and there is a maturity mismatch. That means at the end of second year we have to make this particular payment to the to the depositor basically. Okay? And we have some arrangement कि we are going to pay off this particular loan. There is one another loan who is going to mature at the end of second year. ठीक है? So ऐसा नहीं कि हम उसको open छोड़ें. We borrowed money for 2 years, we lended for 5 years, but we do have some calculations. There is one another loan which is going to be mature at the end of second year. So with that particular loan, we will pay off this particular one. Now, sometime what happened? Like that customer become, there is some delays in the payments and all. So there generally comes these kind of scenarios. Okay? Let's say we have a plan ki we have some market positions aapka, we will sell those particular securities and then we will pay off these kind of obligations and all. So that is something, they can be a reason for your overall liquidity risk. It can be linked with the credit portfolio or market portfolio. But straightforward, if you ask your question answer, it is part when it comes to the your NPA things, that is part of your credit risk and all. Short-term borrowings for long-term fundings आपका. Yes, this usually we do, and we have planned ki this, like whenever we create these kind of assets, so with some other assets we are going to pay off that remaining amounts and all. So that generally comes under this one. Correct? Hai? Rukmini ma'am, you got your answer. So these are the different type of risk: liquidity risk, interest rate risk, market, credit, operational, and others. So once we'll go through these units, आपका ठीक है? For every type of risk we have your dedicated units आपका ठीक है? So they'll get covered through the different units and all, right? चलो, next one guys, risk regulation in banking industry, unit number 13. So it is all about your Basel norms and the three pillars of Basel that is minimum capital requirements, and we have the second one is your supervisory review process and market discipline. So they generally comes under this particular. Rukmini ma'am, you got your answer for that one? Yes or no? If you have any doubt, please do let me know. I'll try to explain that one also. So if we come to this particular one, we have Basel I, we have 1996 amendments. This is very important, where we generally included the market risk in Basel I. Okay? So earlier, market risk was not part of the Basel I, but with the amendments of 1996, we included that particular. Basel Accord 2 आपका. Then we have capital charge for credit risk, capital charge for market risk, and operational risk. Pillar 3 आपका supervise. Pillar 1, where is pillar 1? ठीक है, it should be here only. ठीक है. So we have pillar 3 आपका market discipline, capital conversion buffers, leverage ratio, counter-cyclical buffers, systematically important financial institutions, and risk-based supervision of RBI. So these are the areas which are generally part of this particular one. Okay? So regulation of banking industries, necessities and goal. Please quickly go through this one. Everyone guys, please quickly go through this one. Then, so basically, when it comes to the banking risk or the risk regulation requirements, I hope you guys are aware about the Hersted risk. Hersted risk was something linked with the your there was one bank from the Frankfurt, Germany, that got liquidated during before the making of settlement, forex settlements and all. Okay, we discussed this particular one. Then we raised this particular concern in the front of BIS, Bank for International Settlement. They form a committee to study these kind of challenges in the future also, so we can have some sort of proper guidelines and all. So then BIS, they form a permanent five committees. That five committees are jointly known as BCBS, Basel Committee on Banking Supervision, and on timely basis they generally release some sort of guidelines, so bank they can work on those particular areas or according to those particular guidelines. Okay, basically these guidelines are toward the regulatory bodies, and regulatory bodies with some modification they implement in their economies itself, right? Like let's say Basel I, where we have CAR, capital adequacy ratio of 8%. Initially, with the recommendation of Narsimham committee, we implemented it as a 8%. But with the recommendation of Basel II, Narsimham committee too in 1998, we increase it from 8% to 9%. For global bank, it is suggested by the BCBS they should maintain at 8%, but we are maintaining at 9%. Okay? With our Indian banking structure and all. Even with similar things, we have so many guidelines under this particular one, right? So it is overall to provide the strength to the financial system. If any contingency or any stressful situation occurs, so our bank they can handle those particular things or those particular scenarios. So they have suggested so many things like leverage ratio, counter cyclical buffers, LCR, NSFR. So these are the recommendations of Basel committee. हाँ बिल्कुल अजीत सर हाँ. So that was a time zone issue and all. Okay. So that is something related to this. So these are the areas आपका like improving the safety of banking industry by imposing capital requirement in line with bank risk, leveling the competitive playing fields of the bank through setting common benchmark for all players, promoting sound business and supervisory practices, controlling and monitoring systematic risk, protection and protecting interest of depositors, as depositors cannot impose a real market discipline on the bank itself. Okay? Systemic risk, I hope everybody knows. Okay? So other things are very common here. Systemic risk is basically when a failure of one bank lead to failure of multiple banks. Okay? So that is generally known as systemic bank, and we experience this particular events with the global financial crisis, 2007-8, when Lehman Brother Bank, who generally got defaulted, and that default lead to so many other banks of US and insurance companies, and then it spread across the world. That spread is generally known as contagion effect, right? So that is something which is related to this one. So it is defined here also. So systemic risk is a risk of failure of whole banking system. An individual bank failure is one of the major source of the systemic risk. This happened because of high relation that exists on a ongoing basis between a bank through mutual lending and borrowing and the other commitments. Okay? So as we face in the Lehman Brother case itself, okay? Due to that property bubble things and all. So once that bubble burst, so the most of the asset they start becoming non-performing asset. So Lehman Brother banks, it got defaulted, and Lehman Brother Bank was one of the largest bank in US that time. So once that bank got collapsed, so जो छोटे छोटे banks थे सारे collapse होना start हुआ, insurance companies, and it make a huge impact on the US economy as well as in the world economy. Okay? On the world economy. So now the outcome of this particular event was systematically important banks, and in case of India we have DSIP concept, domestic systematically important bank, where we have three banks. Okay? These three banks we all know, SBI, ICICI and SDFC, and there are some provisions and there are some case studies around that particular one which get asked in your previous examination also, right? So these were the four committees, five committees which was founded by BCBS or BIS. So basically 1974, a number of banks, they released Deutschmark to Bank Hersted in Frankfurt, Germany, exchange for the dollars payments that were to be delivered in New York. Due to differences in time zone, that there was a lag in dollar payments to counterparty banks during the Bank Hersted was liquidated by the German regulators. देखो जितने टाइम में इसको उनको पेमेंट करना था, टाइम जोन हॉरिजन का डिफरेंसेस था, और जब आपको उनको एक्चुअली पेमेंट रिसीव होनी थी उससे पहले वो बैंक आपका लिक्विडेट कर दिया गया, किसके द्वारा, वहां के जो रेगुलेटर है उनके द्वारा, ठीक है. So this issue was raised, and to solve these kind of issues, we approaches BIS, Bank for International Settlement, and they created one committees, आपका Policy Development Committee, Supervision and Implementation Group, आपका Basel Consultative Group, Microprudential Supervision Groups, and Accounting Experts Group. And they have so many task forces and subgroup also. They generally work on different areas. 1988 Basel I came. 1988, the Basel Committee on Banking Supervision introduced the capital measurement system called Basel I Accords, also known as Basel I. So it focused almost entirely on credit risk, defining the capital and structure of risk weight for the bank itself. The minimum capital requirement was fixed at 8% of the risk weight asset, right? India adopted Basel I in 1999. In India, however, the bank are required to maintain capital to risk weight assets, CRAR, at 9% on an ongoing basis. Okay, this was the recommendations of your Basel II committee, sorry, Nursimum II committee, right? So this portion is very important. This get asked so many times. Okay? So 1996 amendments in Basel I itself. So 1996 market risk amendments introduce an explicit capital cuisine for the market risk to which banks are exposed because of their trading in equities, debt securities, forex, commodities, options, etc. Allow bank to use their internal rating model to ensure their market risk also. Okay? So with this amendment, we generally included, there was an inclusion of market risk in Basel I. Earlier, it was entirely focused around the credit risk or the management of CAR against the risk weight asset. But with 1996 amendment, we included market risk as well. So market risk आपका in 1996, BCBS published an amendments to 1988 Accords to provide an explicit capital cuisine for the price risk to which banks are exposed, particularly those arising from the trading activities. This amendment was brought into effective from 1998. So it got implemented in 1996 and got amended in 1996 and implemented in 1998. Silent feature of the amendments are given below, and these are very important. Okay? So you have to, I'll mention homework here. Okay? Please go through these particular one, and you will definitely get these areas. If you got any doubt, so you can share with me. But this is very important. हाँ, थोड़ा सा इसको ध्यान रखिएगा. Please do not ignore this particular one. ठीक है? So it is all about the inclusion of your market risk and all. Okay? And if you study this particular one, you'll easily get these one. चलो, now Basel II आपका, ठीक है. So it Basel II, which include accord system, ठीक है, pillar system basically, ठीक है. We have 3 pillars आपका. Minimum capital, actually we are going to discuss all these pillars with your final unit, because in final units it is all about these 3 units only, ठीक है, these 3 pillars only, right? So minimum capital requirement, supervisory review process, and market discipline. So basically Basel II was a refined and reformed way of Basel I itself. Okay? So in Basel I, we have only this part, that is capital requirements, CAR we introduced, and we introduced the market risk and all. But here, along with that capital requirements, we also come up with 2 new things. One is supervisory review process, where we have 4 principles. These 4 principles are very important. They get asked so many times. And market discipline, we have so many disclosure norms. Okay? So these disclosures basically they are from the BCBS, and accordingly from we have RBI also. So they are generally part of this particular one, right? So okay. So minimum capital requirements. This portion is again very important. So capital base, which is a combination of tier 1, tier 2 and tier 3 capital. Tier 1 is our core capital. Tier 2 and tier 3 are basically assisting capital. The combination of all three capital is generally known as capital base. The sum of 1, 2, 3 elements will be eligible for inclusion in capital base, subject to now your tier 2 and tier 3 will be decided on the basis of tier 1 capital, that is your core capital. So total of tier 2 supplementary elements will be limited to maximum 100% of your tier 1 elements. Okay? So let's say if your tier 1 capital is 100 crore, so your tier 2 capital can be maximum आपका 100 crore rupees. ठीक है? Subordinated debt will be limited to a maximum of 50% of tier 1 capital elements. Because subordinated debt means secondary debt. Okay? So which gets secondary preference at the time of liquidation. So it can be maximum 50% of your tier 1 capital. Tier 3 capital will be limited to 250% of bank tier 1 capital is required to support market risk. Okay? So this is something is this where general provision, general loan losses reserve include amounts reflecting lower valuation, assets valuation reserve which take the form of latent gain or latent gain on unrealized securities will be subject to a discount of 55%. So these are some rules आपका around which accordingly bank they have to maintain their capital base and these guidelines are important. ठीक है, तो थोड़ा सा इनको याद रखिएगा even during solving the case studies as well as आपका straightforward questions, they'll be helping you in different ways. So supervisory review process, the selection discussion, supervisory review process, one was capital gain. So when it comes to the supervisory review, it is basically the responsibility belongs to two areas. One is bank itself. They have to meet with the minimum requirements which are generally provided by the home regulators. In case of India, it is RBI. So like let's say we have to maintain CRAR of 9% or the additional the requirements, the regulatory guidelines and all. So if a bank is not fulfilling those particular areas, so supervisor they need to take early action. So that is suggested in this Basel II paper आपका. So where we have 4 principles and these 4 principles are very important one, right? So these are the 4 principles and these are very important, guys. Principle 1, which is related to bank itself. Bank should have a process for assessing their overall capital adequacy in relation with the risk profile and strategy for the maintaining their capital levels. Second principle toward the supervisors. Supervisors should review and evaluate bank internal capital adequacy assessment and strategies as well as their ability to monitor and ensure their compliances with regulatory capital ratios. Supervisors should take appropriate supervisory action if they are not satisfied with the result of the process itself. Principle 3, supervisors should expect bank to operate above the minimum regulatory capital requirement. Let's say if CR is 9%, so they should at least maintain that 9% or above than that, and should have the ability to require banks to hold a capital in excess of the minimum. So the final one, आपका fourth one, supervisor should seek intervenes at the early stage to prevent capital from falling below the minimum level required to support risk characteristics of the particular bank and should require rapid remedial action if capital is not maintained or restored. If any bank is falling below those particular level, so they should take early remedial action so we can protect that particular bank and we can solve the issues and all. ठीक है, तो अगर आप लोग नहीं देखोगे तो कहीं ना कहीं आपका there will be a problem in the long term itself. So these are the 4 principles under your supervisory review process, ठीक है, which were provided by BCBS and they get asked so many times. ठीक है, so module B के अंदर what you'll experience, there are lots of BCBS guidelines. ठीक है, for operational risk we have 11 principle. For liquidity risk after this global financial crisis, there are 13 principles, and they get asked so many times. So please go through these areas specifically. Basel आपका pillar 3 is basically it is a basically it is Basel III, which is basically reformed and refined way of Basel II itself. Same things, but we have mentioned enhanced or enhanced. Okay? Nothing else. Okay? So that is the one. So we generally providing with BCBS that generally try to provide more strength to the financial system and all, right? So RBI issue guidelines based on the Basel III reforms on capital regulation in May 2020, May 2012, and we start implementing these particular one from April 1st, 2013 itself. Okay. Improve the banking sector's ability to observe ups and downs arising from the financial and economic instability, improve risk management ability and governance of banking sector, strengthen bank transparency and disclosures. So these were some key objectives of the Basel III itself. Okay. So so these are the areas. Better capital, basically these were the key initiatives under the your Basel III. So first one is better capital quality. Okay. So better capital quality. One of the key element of Basel III is to introduction of much stricter definition of capital. Better quality capital means high loss observing capacity. So this turn will mean that bank will be stronger, allowing them to better withstand period of the stress. Okay? So like we introduce LCR for ultra short term period of 30 days, NSFR up to 1 years, or we come up with the counter cyclical buffers or आपका leverage ratios and all. So they get managed through these particular one. Okay? So we can have bank can have strong capital if there is any stressful situations, so we can handle that particular situation, right? Under this one we have capital conversion buffers 2.5%. Another key feature of Basel III that now bank will required to hold a capital conversion buffer of 2%, 2.5%. That aim asking to build conservation buffers is to ensure bank maintain a cuisine of capital that can be used to observe losses during period of financial and economic stress. Okay? So this is something aapka one additional layer. Okay? Let's say how you'll understand this one. So earlier your let's say in case of India it was 9%. Again, this is the core capital which we are maintaining against the risk weight asset. Now what we did, we put one additional layer, okay, with additional layer of 2.5%. Okay. Now if anything happen in with Indian economy, so agar kuch bhi aisa stressful situation hota hai, so what will happen? First it will get breached. Okay. So first it will get breached aapka. So we this portion, okay, this is kind of a center. We are providing one additional layer of security with आपका your capital conversion buffers आपका, ठीक है? So that is CCB. So if anything stressful situation will happen, so first it will get breached. So we'll get more time to deal with that particular situation, and time is very important during any stressful areas. So before this also we have your LCR आपका bank wise. This is something economy wise to deal with the economy wise situation or the broader stressful situation in the economy. Bank wide also we have LCR, NSFR and all. We have to maintain those particular one greater than equal to 100%, and we all bank are maintaining those particular things. So that is something we are adding some additional layer so we can have strong capital quality. So capital conservation buffers CCB. Then we have minimum common equity CET one capital requirements. This is also again very important. Yeah. So minimum common equity and tier 1 capital requirements. The minimum requirement for common equity, the highest form of loss observing capital, because we do not have to pay any interest and all, has been raised under Basel III from 2% to 4.5% of the total risk weight asset. The overall tier 1 capital requirements consisting of not only common equity but also qualifying financial instrument will also increase from the current minimum 4 to 6%. Okay, so we are adding some additional or secure capital for the banks So we can survive in a stressful situation. Leverage ratio is another one. So a review of financial crisis 2008 has indicate that value of many assets fell quicker than assumed from historical experiences. So this bank now Basel III rules include a leverage ratio to serve as a safety net. This aimed to put a cap on swelling leverage in the banking sectors on the global basis. 3% leverage ratio of tier 1 will be tested before mandatory leverage ratios introduced in 2018. Liquidity ratios, so where we have LCR and where we have NSFR. Okay? They also get implemented in the banking system itself, right? So LCR, liquidity coverage ratio for ultra short term aapka requirement, liquidity requirements. And this is something where with this particular ratio, what we are generally doing are available source of fund of आपका fundings and required source of fundings आपका कि let's that borrowings and lending. So we can have at least 1 year's periods. This generally applicable for the 1 years. So these are the liabilities and these are the stable source of fundings through which we are going to pay off those particular liabilities. And this is something within a span period of 30 days. If anything happened in the economy or with that particular bank, we should have at least 30 days obligations at a time with us in the form of high quality liquid assets. So if it is required, we can easily liquidate them and we can pay off those particular liabilities. And it is assumed that within 30 days of period, we can come up with some solid solutions and all. Okay? So when it comes to the LCR, it is net stable, value of high quality liquid asset, unencumbered high quality liquid asset divided by total cash outflow in 30 calendar days into 100, and your ratio should be greater than equal to 100%. And every bank they are maintaining this one. When it comes to the NSFR, okay, this is आपका NSFR, okay, a net stable funding ratio, available stable fundings divided by required stable fundings. Again, your ratio should be greater than equal to 100%. Okay, so try to remember these formulas also; they'll definitely help you, right? Next one. So available funding and आपका required funding. So available funding means आपका, ठीक है. So basically when it comes to the available funding, so we have payment accounts, saving accounts, आपका other debts and all. ठीक है. Required आपका loan, other assets, reserves and assets, they generally comes under the portion. Okay, we'll discuss this particular one in detail in our last unit itself. We have what comes under and their average आपका which bank need to maintain. So that is, there is a chart, we'll go through that particular chart. So LCR is generally for 30 days, it is up to 12 months. It is liquidity requirement, it is funding requirements. Liquid assets आपका both liquid and non-liquid assets can be part of that particular one. Correct है? चलो. So DSIB आपका, we have domestic systematically important bank, or with this after this global financial crisis and all, we come up with the solutions that is called internationally domestic financial systematically important banks आपका, ठीक है. And we have this structure, and this get asked so many times. ठीक है. Last year also there was a case study around this bucket size आपका, ठीक है. We have 5 buckets and we have 3 banks from India. They generally categorize as DSIB by RBI. ठीक है. These are ICICI, SDFC and State Bank of India. From April 1st, 2025 onwards, earlier SDFC was part of this one itself, but now it got shifted to bucket 2 आपका, right? So basically the concept of DSIB is, or your systematically important banks is, these are too big to fall. Okay? So that is the term which we use. कि जैसे we faced with the Lehman Brothers banks, it got defaulted, तो उसकी वजह से other like small banks, they have dependency on bigger banks. Okay? So if your bigger banks is getting defaulted, that means there will be some sort of a ripple effect in the banking system, and that will collapse your entire banking system. So to prevent these bigger banks, we what BCBS suggested, they says कि these banks, they should maintain some additional capital आपका, ठीक है. And this additional capital is this, right? So they have, apart from the normal guidelines, they have to maintain this additional capital against their risk weight asset. Like let's say State Bank of India, that generally comes under bucket 4, and they have to maintain 0.80% of additional risk weight assets apart from the normal banks. Okay? So the higher DSIP surcharge for SBI and SDFC will be applicable from 1st April 2025. Hence, up to March 31st, 2025, DSIP surcharge applicable to SBI and SDFC is 0.60%. Again, but now it is आपका 0.80% for SBI, and for SDFC 0.40, and the other one also. So please, earlier SDFC was part of this one. Again, earlier, now see, you have to be very careful in this particular case, because when they'll ask case study, if they mention for the year 2025-26, that means you have to apply the data which is given in this particular chart. For SBI, you have to apply 0.80 additional आपका, and for SDFC 0.40, and for ICICI 0.20. But if they ask you for the previous financial year 24-25, so in that case SDFC and ICICI at 0.20 and SBI was at 0.60. ठीक है, तो प्लीज इसको भी थोड़ा सा आप लोगों को याद रखना है. ठीक है दोस्तों. So this is like what, by this way, what BCBS is trying to do. They generally want to try, they generally want to protect these bigger banks because they are too big to fall, right? So that is the logic behind this one. I guess people are, there is no fear about BFM. ठीक है, people are only asking for HRM और आपका BRBL. हाँ, in group itself they are like, there is no one is caring about BFM. What happened, guys? Everything is good with BFM. It's one of the tricky paper. You'll see the things in the concept areas and all. ठीक है. So what I can recommend, till this week you can work on the your HRM things if you want, if you wish, if you have done one set of practice with this BFM subject. If not, you should give more attention to this subject because this is very dangerous. Sometimes it becomes very dangerous. So chalo. So now this is the final table. Final table means as of now, bank they have to maintain their capital in this way, like 11.50%, 9% plus CCB of 2.5%. So the overall आपका 9%, and if you add this CCB, so it is आपका 11.50%. In case of SBI आपका plus 0.80%. In case of SDFC plus 0.40%. ठीक है, plus 0.40%. So for SDFC plus 0.40, SBI आपका 10. They have to maintain additional capital buffers for this one. Correct है? चलो, we'll move forward, guys. Capital charge for capital charge for credit risk. Now this is again very important one, where you have to calculate the risk weight asset. Okay, while we do the case studies, there will be number of case studies around this particular one. Capital charge for credit risk, market risk, and operational risk. Okay, in all the areas we'll see the case studies. This is the fundamental part. So under the standardized approach, the rating standardized approach, which we generally use to calculate the credit risk, rating assigned by the eligible external credit rating agencies will largely support the measure of the credit risk. RBI has identified there are number of credit rating agencies. Bank may rely upon these ratings assigned by the external credit rating agencies chosen by the RBI for assigning risk weight for capital adequacy purpose as per the mapping of furnished in the RBI guidelines also. Like we have number of credit rating agencies and all. So as a bank, we can use their ratings also, and we can use their ratings to map the overall credit risk as well, right? So the circular issued by RBI had laid down detailed guidelines on the capital adequacy requirements and the risk weight to the applied in case of the following cases. Okay? So risk weight to be applied in the following cases. Like these are the areas like claim on domestic sovereigns, claim on foreign sovereigns, means आपका any debt which is issued, any bond which is issued by government of India, if you have holding to that, or any bonds which is issued by the foreign governments, if you had holding on those particular one, or if you have created some asset with this, let's say If you have given loan to government of India, that means if you are purchasing bonds of government of India, that means you are giving loan to government of India. So what will be the capital charge for that particular one and all? Claim for on public sector enterprises, claim on multilateral development banks like IMF, World Banks and all. Claim on banks, claim on primary dealers, claim on corporate asset finance companies and non-banking finance companies, infrastructure finance companies, claim included in regulatory retail portfolios and all. So apart from this, we have claim secured by residential property, claim classified as commercial real estate exposures, non-performing asset, specified categories, venture capital, other asset like loan and advances to bank, own staff, off balance sheet items, securitization exposures, capital adequacy requirements for risk, credit default swap, position in the banking. So there is a like basically while you create the capital charge. Capital charge means that mitigation amounts. Okay? So let's say if you are dealing with this kind of assets, so what should be the capital? What is the risk involved in that particular one? Accordingly, or in the proportion of risk itself, we have to maintain some additional buffer. That additional buffer is your capital charge itself. So that generally comes under this particular one. Eligible credit rating agencies. So there are some rating agencies which are generally allowed by RBI. This is the list. Okay? So basically we have these domestic, आपका ब्रेकवुड रेटिंग एजेंसी, क्रेडिट एनालिसिस एंड रिसर्च लिमिटेड, क्रिसिल, इकरा, आपका इंडिया रेटिंग रिसर्च प्राइवेट लिमिटेड, स्मेरा रेटिंग्स आपका, ठीक है, वी हैव इन्फॉर्मेटिक्स वैल्यूएशन एंड रेटिंग प्राइवेट लिमिटेड. अपार्ट फ्रॉम दिस, RBI also have allowed these three international rating agencies आपका. One is Fitch, another one is Moody's, and the final one is Standard and Poor. So banks, they can use their ratings also while they are giving loan to any customers, and even to verify the risk involved in that particular asset itself. Next one, guys, internal rating based approach. Okay? IRB. This is again very important one. Okay? This is basically bank level model. Okay? So this is a bank own model to assess the risk itself. So one of the most innovative aspect of new occurred is IRB approach to measurement of capital requirements for credit risk. IRB approach offered following two options. One is foundation IRB approach. Another one is advanced IRB approach. Since the approach is based on bank internal assessment, the potential for more risk sensitive capital requirement is substantial. So internal rating based approach, IRB approach, it is generally based on these elements. These are like default probability. So default probability of default, which means the likelihood that borrowers will default over a time horizon. Then we have loan given default, which measure the proportion of the exposure that will be lost in the default when that default occurred. So first one is probability of default. In what time horizon? Let's say we have created an asset for 10 years. There is a probability after at the end of 7 years that customer can become आपका defaulter. That means 3 years. Then second, loss given default, which measure the proportion of the exposure that will be lost in the default. And during those 3 years, remaining 3 years, what amount we are going to lose. And exposure at the default, which for the loan commitment measure, the amount of the facility that is likely to be drawn in the event of default, आपका, which for the loan commitment measure, the overall let's say if we are giving 1 crore rupees, so how much principal we might lose in that particular case. Maturity आपका, which measure the remaining economic maturity of the exposure. Let's say that 3 years in our case, like let's say if it is for 10 years, so 3 years that is maturity in that particular case. Again, with the help of case studies itself, there are case studies around this particular one, and that is very important one also. Okay? That get asked so many times, so we'll practice that area also. ऑलराइट, चलो तो आगे बढ़ते हैं. यूनिट नंबर 14. ठीक है. सो यूनिट नंबर 14, which is all about your market risk. Okay. Unit number 14, market risk. So it includes basic market risk concept, market risk in bank, management framework. Now see, organization, identification, measurement, risk monitoring, control, risk reporting, managing trading portfolio and all. So now there are some things which will start getting repeated. ठीक है, तो कुछ चीजें आपकी होंगी जिसमें आपको क्या देखेंगे, बार बार आपका क्या हो रही है, रिपीट हो रही है. ठीक है. So with every form of risk you'll see these kind of guidelines and all, and they'll start getting repeated. So market risk is something, there are some adverse movement in the market, and due to these adverse movements our portfolios, our market portfolios are getting affected in a adverse manner. That means they are hurting our profitability. Okay? So we are, due to those particular one, we are making some sort of losses. So market risk is the adverse deviation of mark to market value, the trading portfolio due to movements, market movements during the period required to liquidate the transactions. The period of liquidation is critical to assess such as adverse in such adverse deviations. If the period of liquidation of the position get longer, the possibility of larger adverse deviations from the current market value that will आपका increases. So see, let's say we have some portfolio. Let's say we have XYZ company shares. Okay? So let's say we have XYZ companies shares in our portfolio, and we have, let's say, worth rupees 100 crores. Okay? 100 crore rupees worth value, we have XYZ company shares in our proprietary position. That means our bank owns this particular shares in this XYZ company, and that means we are bullish about this particular company. We have some sort of long-term perspective around this, कि this company shares will go up and all. Or else it can be a conversion of debt into equity also. That company have taken loan from us, but they won't be able to make that particular payment. So we have converted those particular one into that debt into equity. Now, or in simple terms, let's say we have some positive outcome from this particular one, this company shares will go up. Okay? Now there is some adverse movement, means we are bullish about this particular security, but the prices of this company shares are coming down. Okay? So coming down, let's say our position was at 500 that time aapka, when we buy these particular shares. Now the share prices came down to 450, and there is a probability that the prices will come up to 300. Okay? So there are some predictions in the market itself due to fundamental change in this XYZ company. Now we have two options. Okay? In this situation, we can face two areas. Basically, what we are facing liquidity risk. One is कि we won't be able to liquidate our position at the fair market prices. One option what we have, we can sell off at 450 and we can exit and we can make a loss of 50 rupees per share from this particular company. Or sometime these movements are something like this, as SBI faced in case of Kingfisher Airlines. Okay? So we do have Kingfisher Airlines shares, but the problem is the prices was 147. Now directly it came to 10 rupees. There is no one to buy these particular shares. There are only sellers in the market when that scam came out, right? So this one situation, it is partially illiquid. We are not getting the fair prices in the market. Another one is completely illiquid. We won't be able to sell our shares because there is no buyers in the market itself. Okay? So sometimes these adverse movements, which generally make the negative impact on our portfolios and all, so they generally comes under this one. So bank also have several activities and undertaken transactions that result in market exposures. They are not immune to those risks and have to face them too. All such transactions are reflected in this trading books. It can be debt securities, equity, foreign exchange, commodities or derivative. Commodities are not allowed in case of India, not permitted in our country presently. Okay? Please do remember this one. Okay? But mostly we have around the position in these particular securities. So they are subject to M2M, and that M2M can come down at a level of 0 itself. ठीक है, कई बार ऐसा हो सकता है कि जहाँ पे you have bullish trend about that particular one, but there are some different situation in the market and their prices are coming down, completely coming down. So trading book, it is, see, market risk is all around your trading book. So that's why we are studying this one. So trading book also include position in financial instruments arising from mismatch principal broking and market makings, or positions taken in order to hedge their elements of trading books. The proprietary position are held with trading intent and with the intent of benefiting in short term from actual or expected differences. So differences between buying and selling prices or hedging other elements in the trading book also. A bank trading book exposure has the following risk which arise due to adverse changes in market variables such as interest rate, currency, commodity, market liquidity, and other volatility as impact the bank earnings and capital adversely. Majorly आपका these are the areas. ठीक है? One is liquidity risk, another one is आपका credit or counterparty risk. Credit and counterparty risk is something. Liquidity risk आपका, as I gave you an example of that XYZ company. So it can have a partially liquid or it can be fully illiquid. Credit or counterparty risk is something, let's say we have some position in derivatives. Okay, so let's say we have some position in swaps or forwards, and in that case, if that another party they defaulted and they do not fulfill their promises and all, so that is something related to your credit or counterparty risk. Okay? So trading liquidity is ability to freely transit this, and the risk is basically trading liquidity risk. So adverse change in market prices, inability to liquidate position at a fair market price, and the another one is large changes caused by the liquidation of position, inability to liquidate position at any price. There can be these kind of situation. Adverse movement, one is like we won't be able to liquidate our portfolios at fair market prices, partial illiquid, and another is आपका inability to liquidate position at any price, as I gave you an example of Kingfisher Airlines also. So these are the areas which generally comes under this one. So credit and counterparty risk, market value of credit risk, credit of users or borrowers, that is reflect in prices. Credit risk is a credit risk of traded debts such as bond and debentures and commercial papers indicated by the credit ratings given by the rating. Credit rating indices the risk label associated with the instruments is forced into add-ons to the risk-free rate, and this. The lower risk labels, the lower the spread over the risk-free rates and all. Credit risk आपका, that basically it is आपका something related to tradable securities, or mostly it include in derivatives or some sort of आपका जैसे debt, bonds and others. These are generally categorized under this particular one. Derivatives also should have mentioned here also somewhere. Okay. Then आपका risk management framework, again when it comes to the risk management framework, for we have risk identification, what type of market risk we are going to face in the near future or in our portfolios, at portfolio level or as the transaction level. Risk measurement, what is the overall value or the quantifying that those risks, how much loss we will face if we make those particular positions. Monitoring and control आपका the processes or the model which we have developed, so where we have VAR and all, and risk mitigation आपका so when actually those situation occurs, how we are going to has those particular position or how we are going to execute our existing plans and all. Organizational structure, again same thing आपका. So board of directors, risk management committee, we have ALCO, asset liability management committee, ALM support groups, and आपका middle office. ठीक है? So see, it's the same one. The only thing is we have eliminated आपका operational risk management or the other groups. Board of directors, they have eventual responsibility for any sort of market losses, market risk, any losses due to the market risk. Risk management committee for the overall bank level risk management. So they generally weightify the different risk from the different portfolios, including marketing risk. ELCO आपका asset liability related. Then we have ALM support and we have middle office here. So there is something missing in this one. Organizational structure, board setting the market segments and all thing. Okay. Asset live. Okay. First one, this is a risk management committee, board level. So responsibility of risk management committee in managing your market risk. So setting guidelines for market risk management and reporting, ensuring that market risk management process conform to a policy, setting up prudential limits and their periodical reviews, ensuring robustness of measurements of the risk model itself. Role of ELCO in market risk management committee. So the role encompass the following things: product pricing for the deposit and advances, maturity profile and mix of incremental asset liability, articulating interest rate view of the banks, funding policy, transfer policy, balance sheet management. They generally comes under this one. Risk identification. Damn. So risk identification. Now this is something new aapka. I guess we'll get something new from this one. Role of different committees will be asked. It see Pujisa ma'am na in some cases they ask like role of it can be something around ki role of risk management committee during management of credit risk or आपका management of operational risk. So this kind of thing. So they have given, if you open your book also na, so they have segregated, mention these particular overall structure, and if you'll go for one time also na, you will be able to memorize those particular. There is nothing new. If you'll study for one risk very well, if you understand that particular risk and others very well, the role and responsibilities are similar. Like even for board of directors, with every type of risk, you'll see they have mentioned that board of directors are eventually responsible for overall management of market risk, or another in case of liquidity risk, they have mentioned liquidity risk, or even the other ones. Okay? Everything which is part of the risk management policy or procedures exposure, they are part of the board approval policy. So that's why the accountability belongs to the board itself. So risk identification, all product and transactions should be analyzed for risk associated with them. While various risk associated with the standard products means आपका these are already tested product in the market. Like so we are selling those particular product or we are entering in those particular product from years आपका, ठीक है? So that is your standard product. The risk in case of non-standard product need to be analyzed. Non-standard product is something we are coming with some new product or we are entering in a new product for the very first time. That is your non-standard product. So in case of standard product, we know like what is the risk inherent or how much risk we can have in those particular one based on the past experiences and all. But in case of a new product, there is like uncertainty. So we have to analyze and monitor that particular one very well, right? So usually standard product would have product programs. They have already product programs, means everything's about the journey, risk, return, capital, everything is there for each of them. All risk taking units operate within the approved product program itself. Okay? Product program is something आपका, this is that trinity आपका, okay? How much capital will be required, what is the risk level and what is the return levels and all. So we have exposure limits आपका deal wise or others wise, whatever it is, and we have the these products are already tested in the market. We have entered in those particular so many times, so we know as a bank wise we have policies while we entering in those kind of contracts or those kind of products. But for the new things, there are lots of uncertainties, so that's why we have to be very careful. We have to test them again and again, then we have to convert them into the we have to build a product program for these new product as well. So product program define procedures, limit, control for all aspect of the product. The product program also specifies market risk measurement at individual product level and aggregate portfolio level. New product or non-standard products may operate under product transition memorandum. So product transaction memorandum on a temporary basis while a full market risk product program is being prepared. So initially we generally run the new product at product transaction memorandum. So once we experience everything, then we ship them to the आपका product. We generally develop a product program for those new product also, right? रिस्क मेजरमेंट आपका, सो फॉर मार्केट रिस्क वी हैव सेंसिटिविटी एंड डाउनसाइड पोटेंशियल, ठीक है. सो सेंसिटिविटी इज समथिंग लाइक it generally tell us about the upside and downside, ठीक है. It is something कि it is about how one variables is basically like we have volatility, sensitivity and downside potential, ठीक है. So when it comes to the sensitivity, it is like Sensex, ठीक है. So like let's say the आपका Sensex, if you comes to Sensex, we have how many 30 companies आपका, ठीक है. So we have 30 companies like Reliance, TCS and all these are part of this particular one, and every company they have some sort of weightage. Let's say 9% to Reliance, आपका 7% to TCS or the other one, ठीक है. So we have 100. So now let's say if sensitivity is something, the Sensex value is generally changing according to these elements, ठीक है, these different elements. Like let's say there is a movement in Reliance of 10% up, ठीक है, the Reliance share price goes 10% up. So with this weight आपका the 9% weight which is belongs to the Reliance in this entire आपका group of companies or the bucket which we have created, ठीक है. So it will affect positively 9% upside to this particular one, correct है. ऐसे ही we have given a weightage to TCS. So there are like if you'll see the Sensex, there are 30 companies. Let's say 25 companies they perform well during that particular trading period, and there are 2-3 companies they were perform आपका at the level. So the overall weightage is आपका at higher side, so they are moving. So this is something here also. Sensitivity आपका, what are the variables who all are going to affect our market portfolio, ठीक है. So for a profitability variables or loss variables, there are let's say we have invested in a XYZ company shares, and these are the variables who all are going to affect that XYZ company shares or that USD INR आपका currency pair. So if those variables, how those variables are reacting, अगर उनमें let's say if there is a 5% change in that variable X, how much it is making an impact on our security. So that is the sensitivity. They can have, while we do the sensitivity or volatility analysis, it can have upside and downside outcomes, ठीक है. तो हो सकता है अगर आपकी sensitivity में positive side है, it can lead to the upper side. If it is आपका there is negative variables are more, it will lead to the downside. The another one is downside potential. This we assume one of the best method to account the market risk. Reason being, it generally shows us around the like it generally use sensitivity and volatility as a parameter, but they are negative areas आपका कि sensitivity wise there is a negative, like जैसे upside इतना जा सकता है, downside इतना जा सकता है. So we are accounting that downside वाला. Volatility wise आपका upside it can go this way or downside it can go this way. तो volatility का भी downside, and by using these two downside and all we are creating आपका downside potential कि in next trading day or in next month or 90 days or 1 year, what can, like how much loss we can made from this particular portfolio, or what can be the adverse impact on this particular portfolio, that we generally get to know through the downside potentials and all. So इसलिए सबसे ज़्यादा आपका यूज किया जाता है. So sensitivity, as had been stated, deviation of the market prices due to unit movement of a single market parameters. Like in case of Sensex, single element is TCS, Reliance or the other companies. These are the elements. How these elements are moving. तो अगर TCS में मूव हो रहा है अप 10% का, तो उससे Sensex पे कितना वैल्यू इफेक्ट पड़ रहा है अपसाइड में, ठीक है. अगर TCS इज कमिंग 10% डाउन, सो इसका इम्पैक्ट कितना हो रहा है आपका Sensex के ऊपर, ठीक है. सप्लाई डिमांड पोजीशन, इंटरेस्ट रेट, मार्केट वॉलेटिलिटी, इन्फ्लेशन, एक्सचेंज रेट, स्टॉक प्राइसेस, these are the variables in case of market risk, ठीक है. So market portfolio is depend on these particular things. If these will be in favor, so your portfolio will go up. तो अब यहाँ पे how this interest rate is impacting our portfolio, how this आपका exchange rate is impacting our portfolio, that is we generally do with the help of sensitivity analysis. Downside potential, risk materialize only when earning deviate adversely. Downside potential capture the possible losses only, ठीक है. It does not talk around the positive side, it only talk around the negative side आपका. and ignore the profit potential. Downside risk is most comprehensive measure of risk as integrate sensitivity and volatility. Okay? Sensitivity and volatility with adverse effect of uncertainty. This is the measure that is most relied upon by banking and financial services industry to use and also used by the regulators. Okay? So we are like basically what we are doing, we are trying to protect us. तो प्रोटेक्शन के लिए वी आर चेकिंग द एडवर्स लाइक वर्स्ट केस सिनेरियो. ठीक है, क्या आपका ज्यादा से ज्यादा डाउनफॉल क्या हो सकते हैं, एंड वी आर प्रोटेक्टिंग आवर बैंक फॉर दैट पर्टिकुलर रिस्क मॉनिटरिंग एंड कंट्रोल पॉलिसी गाइडलाइंस लिमिटिंग रोल एंड अथॉरिटी स्ट्रक्चर्स एंड ऑल. प्लीज गो थ्रू दिस वन. System and procedures for unbundled product transaction to capture the all risk, guidelines on portfolio size and mix, this and that. Okay? These are the areas which we generally cover through the risk monitoring and control. Okay? So basically, while we are framing our policies or models to control market risk, we are generally considering, we have to consider these many areas. Okay? Next one, guys, aapka, next one we have credit risk. Okay? So next one we have credit risk. Okay. Next one we have credit risk. Okay? So credit risk, when it comes to the credit risk, it is basically credit risk management framework. Again, organization, risk identification, measurement, credit control and monitoring, credit risk policies and guidelines, credit control, monitoring and portfolio level, active portfolio and controlling and all. Okay? Securitization and all. So just a minute. Total how many units we have? We have 8 units and we have done with 4, I guess. No? 1, 2, 3, 4. We have 8 units and we have done with 4. So 4 we will do in remaining session, guys. Okay? So this is again basically these are very important one. Okay? So today is Wednesday, Thursday, Friday and Saturday. Okay? So we have this target. Okay? So Thursday we will be doing your so Thursday we will be doing the remaining part of this one because we have so many slides remaining left with this particular one. I do not want any sort of hurry with this one because this is very important. Module B aapka, A and B both are study wise, these are very important. So remaining 4 units we'll cover in next session itself tomorrow. Then we have 2 more modules aapka. Okay. Achha, you guys have holiday on Friday. Anyone, can you please let me know? If you have holiday on Friday, na, so I can do one session in afternoon. But please do let me know. Is there any holiday on Friday? Somebody told me. Friday को छुट्टी है क्या कोई किसी चीज की? Somebody told me around the Friday things आपका, ठीक है? So if it is holiday on Friday, so we'll be doing one session in afternoon itself, or afternoon or evening, 5 to 7, or anytime I'll let you know, or in the morning आपका, whenever the studio will get available. So I'll do this particular one. ठीक है? So guys, yes, holiday on Saturday. अच्छा, Saturday is holiday. This is your second Saturday. अच्छा, Saturday is holiday na? Saturday. हाँ. So for sure we'll do. So what we can do? So Saturday I'll apart from that module D na. So we will also plan one marathon session around the case studies आपका, ठीक है? Because we have to work on case studies. We have to start working on case studies also. So one practice session I'll do on Saturday itself. Okay? One Saturday, one Sunday. So we'll be having 2 sessions on Saturday. So Thursday and Friday we'll cover these particular one. Or Saturday I want one good session, one big session आपका at least 3-4 years. ठीक है? हाँ. अच्छा, Eid holiday on Saturday आपका, ठीक है? Fine, then we'll do 2 session on Saturday. So Saturday in the afternoons or whenever I'll get the studio itself, na, so we will plan this one. All right. So at least module A revision session or the case studies part and all. Okay? So that we will do. Along with these particular session, guys, I have provided you the compilation unit wise practice. Okay. Basically, I have done the concept part also earlier, but people, those who are comfortable in English language only, so that's why I'm again repeating these particular things and try to help you out with at least the must required thing, concepts and all. Okay. And if you are comfortable in Hindi or आपका basic English language and all, so you can go with those particular session itself. Okay. So I have already done with those particular ones. Okay. So Friday, and by the Friday or Saturday we will be doing the Saturday onwards we will be starting our unit wise, module wise practice also in आपका MCQs and case studies all, because that is also required. Will not have that much of time later on, right? Chalo. So guys, this is it from my side. Thank you for joining this session. I'll share this PDF tomorrow itself. Okay? Once we done with the module A, or what you want, I can share as of now also. Okay? But I first we will go through the entire modules and all. So I'll upload this one also. I have already uploaded for module A, and there are some people who are facing some sort of issues with the that applications. Okay? So whenever you face any issue, what you can do, you can just re-log in, so you won't face any issues and all. And the other part is, if you are facing issue, just do ping me on Telegram or the application itself. I'll personally share with you, right? Chalo. So this is it from my side, guys. Thank you for joining this session. Thank you for watching this session. Bye bye. Take care. I'll see you tomorrow. Good night, guys. Thank you.